Happy New Year to you. I know it's been a long time I've dropped a video. I really apologize for that. I'm glad you're here with me, considering the fact of everything that's been going through the world since last year. So, in today's video, I'd like to talk about something that I think might be of interest to you. If you're planning to set up a new business in 2021, perhaps it's your plan that you have this year, but you don't know how to go about it. In today's video, I'd like to talk about how to set up your business in UK, what you need to be aware of, and anything that you need to know really. I hope you enjoy it. However, before we go on, I'd like to introduce myself to you in case we haven't met. My name is Ola Slimon and I'm your tax girl. I'm a chartered accountant but also a UK tax specialist. I advise small, big businesses, medium businesses on how to run their business tax efficiently in UK. I also advise individuals of their tax issues because what I believe is if you do not deal with it, it's not going to go anywhere and you're going to save money by dealing with it on time. So now that we've met, let's go into today's video. So in this video, I'd like to talk about 3 methods of setting up your business in United Kingdom. The first one is a sole trading business. So with a sole trading business, it's like you, let's say Ola, registering with HMRC as a business. So it is not a legal form of business. But every time we're doing anything in that brings incomes to us, HMRC wants to know about it. So what you need to do then is to register yourself with the HMRC as a sole trader. While you're doing the registration, you can actually do that over the phone or preferably online. Online is easier. While you're doing the registration, they would like to know when you started trading so that you can put you within the tax year exactly that you need to start reporting to HMRC. For example, if I start trading in 2021, because in UK our tax year starts from April 6th to April 5th. So let's say I start trading 5th of April 2021. That actually falls within 2020-21 tax year. But if I start trading 6th of April 2021, just a day difference, that falls within 2021-22 tax year. The reason is because of when you need to submit your returns. Now, if I started my business 5th of April 2021, then I'll then need to have to submit my returns to HMRC, even if it's a day, by January 2022. Because what happens is, as soon as the tax year ends, they give sole traders 9 months to get their account prepared and submit to HMRC and pay their tax. Now, the tax then would then be declared and be paid by that 31st of January. Another thing that is different with sole traders are they pay a different form of national insurance. Most questions I've been asked several times is, can I have a side hustle and also be employed somewhere else? Yes, it is possible. You can actually be employed and also self-employed. All you need to do, remember, is when you finally submit your returns, you need to declare your income, I say this all the time, from your main job and the tax you've paid as well, plus the income from your sole trading business. Now when I say income, the income that you earn, the turnover that you earn, let's say 20,000 minus all your expenses, another 5,000, making 15,000 is the taxable amount. That's the one that you're paying tax on, not the actual amount you were paid, because you've actually had some expenses while you're trying to earn the 20,000, so you get relief for that. The tax you pay is at 20% or 40% if your income, your taxable income is over 50,000, or if your total income, which includes your other income, is over 50,000. I hope that helps. So let's go to the second form of business you can run in UK. Another form of business you can set up while you're in UK if you'd like to have a business is called partnership. The reason why I spend so much time with the sole trading business is because the partnership as well looks similar to sole trading, because what happens is Ola sole trading business will join with another, let's say Olan sole trading business, and we all come together and form a partnership. We'd have to prepare our partnership account every year. However, it's only the share of profits from the partnership that I, Ola, would declare to HMRC and Olan would declare to HMRC. So because of that, it's almost all the rules that goes with sole trading business that goes with partnership. You'd also have to submit your partnership account as well, just to show the source of income that you're sharing between Olan and Ola. Now, the deadlines are still the same as sole trading business. You still have to submit your account by the 31st of January. I know I keep saying 31st of January. Ideally, as soon as the tax year ends, it's better to submit your returns. Number one reason is if you collect tax credits, the tax credit will be able to base your the credit you've given you in that tax year based on what you've earned rather than estimated income. Also, it helps you to be able to have an idea of what your tax is going to be, and then you can spend some time, 9 months, arranging how to pay the tax. Another reason is if the tax you're paying is more than £1,000, HMRC has a system, it's called payment on account. That payment on account is calculated based on your previous year's income. However, if you can submit your returns on time, then you don't have to pay too much payment on account or little payment on account. So my advice always is, as soon as the tax year ended in visible time, you don't really have to pay them on time, but it helps you to have an idea of what you really need to be doing. So that's sole trading business number 1, partnership business number 2. Let's go to the third one. The third form of business that you can set in UK is registering a limited company with a company's house. You literally have to register this on the company's house website. All your information will be with them, because now the business has become a legal company, a legal business. It's a different entity on its own to the owners of the limited company. So therefore, as soon as you've done the registration, all your information will be passed to the HMRC, because every year your compliance issues will be sent to them. The first thing that you'd have to do every year is called confirmation statement. This is usually due by 12-month anniversary of either when the last one was submitted or when the company was incorporated. This is just to show what has been going on in the company for record purpose with the company's house. The next thing is the company's account itself. The company's account is usually due 9 months after the year end. For example, let's say I decide to register my company in January. Automatically, my year end will be January every year. So, except if I decide to change it. So they expect me to submit my account 9 months after the end of January. Now, HMRC says 12 months, company house says 9 months. However, HMRC goes and say you pay your tax 9 months after the tax year end. So I usually tell people like it's 9 months actually. They've just added 3 extra months in case you need to sleep over it. Because how do you know what you're paying tax on if you've not prepared your account? But as usual, I always advise that the earlier you submit your account, the earlier you can plan how to pay your tax. Now, the other thing you need to be conscious and aware about is how do you distribute money from the company? Because Ola Limited is different from Ola. So in that case, am I going to be paying dividend to Ola? Am I going to be paying salary to Ola? Will the company be providing a car to Ola? All those things all have their different tax consequences. And if you do that on time, you could save yourself a lot of money. The only thing I'll say finally is the rate of taxes for companies. So corporation tax, which is a tax on the income of the company, is at 19%. Now, if the company now decides to give some of the money to Ola as dividend, Ola herself will need to declare that on a self-assessment, and the tax on that is at 7.5 of the amount that goes over £2,000. So if the company just gives me £2,000, I don't pay tax on that. Another thing is if the company is paying me salary, and all I need to declare that on the self-assessment returns as well. Even if she's paid tax, the company then needs to pay for my employer's national insurance. That is at 13.8%. Basically, what I'm trying to say in this video is, if you're planning to set up a business, I think you need time to just sit back and think about what you're doing. If you're going to start up with a sole trading business, if you have a friend that you'd like to have a partnership with, or if you want to go limited company. The difference mainly between limited company and sole trading and the partnership is the compliance issue is more. So for sole trading, it's not as much as partnership, and for limited company, it has more compliance issues than sole trading business. So I usually advise, if you want to start small, it's better to start with sole trading business as well, except if you have any other commercial reason or tax efficiency planning reasons why you don't want it to be. I hope this video has been very helpful. Next week, or my next video, I'll be uploading video on how to set up a business in UK if you are not if you don't reside in UK, if you're not a resident in UK. So I'm looking forward to that as well. Have a fantastic day. The good news is January is going to end very soon. Take care of yourself. It's your girl, Ola Slimon.